He'll show up like 20 minutes late.
Come on, man. You're slacking on us? Look forward to seeing you next month, though, buddy. You know, Secret X is coming down the pipeline.
That's very true.
You know, going to be our first big trip. Well, we're going to Florida, but that's, you know, still stateside. So international trip that I've done in probably, 2 years, 3 years?
Wait, Florida, but you're talking about Costa Rica.
Yeah, for Secret X. It's going to be my first international trip.
Oh, sorry. I heard
2 to 3
stateside,
years.
my bad.
So,
Yeah.
you know, I don't know if they have any more spots left, but you guys should check it out. Good time, a lot of great people, great content too.
Absolutely.
You know, but we ultimately have a good time with a lot of good people.
Oh, looking forward to it. So,
we're talking real estate again, man.
What are we talking about today, Ben?
Oh my gosh, something that I think both passive investors and syndicators need to understand, right? The difference between accredited versus sophisticated investors.
Something there's a lot of misinformation about there too. Right?
There's a ton of misinformation.
People make their own assumptions on it. It's really not that complicated.
And things are starting to change, which we'll kind of get into here in a bit, right? What does this mean for people that are trying to do? And we always steer everything towards multifamily, but this goes for any investment, right? Anything that has a PPM. I'm going to get into why knowing if you're sophisticated or accredited is important, or knowing if your investors are is even more important, because you can get in some hot water. So let's hop right into this thing. What is an accredited investor, man?
Accredited investor is basically, defined by the SEC, right?
Yep.
It is someone that the SEC deems as someone that can really they can take the risk of investing. That's probably the best way to put it,
That's the best way to boil it down, risk.
They are someone that the SEC says is allowed to go take a risk in investing in something, right? They are accredited, they have experience and the gusto to be able to lose.
Not necessarily experience.
No, I don't mean that kind of experience, but I mean ultimately, the experience of investing, right, and being able to take on the risk that comes with that.
Yeah.
So SEC is just trying to protect investors. That the SEC, a big part of their job is protecting investors.
Yeah.
That's why they have this. That's why guys like us can't take money from just any Yahoo.
Yeah. No,
right.
So there's a whole
certain
process,
rules that you have to follow, and so.
So the one thing to kind of add to that, right? They define certain criteria that's going to make somebody an accredited investor versus a sophisticated, which we'll get here in a minute, right? But accredited investors usually 200,000 plus in annual income for the past 2 years, and your expectation is that you're going to be able to make that much this year as well, right? If you have a spouse, I think it's 300K, right?
Yeah. And then the rules changed this year too.
Well, I was going to get into that. So, right, so then, or your individual net worth exceeds 1 million, right, excluding your primary residence. Now, what Ferris kind of alluded to is that the SEC knows that these rules and regulations are a little bit antiquated, right? Some of this stuff dates back to 1939, I think, is the law that we have to kind of look out for, right? Which was obviously enacted after the crash that happened back in the late 20s, and a lot of unsophisticated and people that
was it an orange farm?
Something. It was
orange
something like
farm
that.
Or potato farm in Florida.
Yeah, and I don't remember the case.
See, luckily, between the two of us, I am the attorney here, the wannabe attorney. And so basically, a lot of investors lost their money due to a drought.
Yep.
They, went to court, and
they didn't understand the risk.
They're basically, we didn't realize that there was that risk.
Yeah.
So then that's where these rules became involved.
Yeah, so a lot of that kind of came about. But if you can imagine 1939, folks, that was a long time ago. So the SEC over the last couple of years, and we always encourage people, reach out to an SEC attorney. Dugan Kelly, Merrill Calliser, Gene Trowbridge, all three of those guys are great guys. Mauricio as well. They all know their stuff. You need to ask them these specific questions, but we'll just kind of give some high level information of what we know, right? SEC solicited some feedback from them included, as well as other people, to see how can you update these rules for the world that we live in right now, right? Yeah. There's a lot more information. People can get educated a lot more easily now because of the internet. And so I know one of the rules that they're talking about rolling out is if you take a test, right, you can become accredited.
Yeah.
Right? Now, I don't know what that test is going to entail, how long or how complicated it is, but that's one of the ways where, maybe you don't have the wherewithal that would make you accredited, but you have the knowledge to understand the risk that you're taking on when you get into an investment that's for accredited investors only.
Does it go the other way around? If you have the wherewithal to be accredited, then if you flunk the test, do you lose your accreditation?
Ooh, actually, that'd be an interesting concept. Yeah. And we know a lot of accredited folks, and some of them are very, very polished and know their stuff, and some of them not so much, right? And so, I think they're trying to solve that one problem, which is, somebody that might be worth $100,000 might know more than somebody that's worth 200 million, right? Because they just understand the investment that they're getting themselves into, right? So that's accredited right? And when does that come into play, right? We have PPMs. We're selling shares of an LLC, right? And as part of that, we have to file certain paperwork with the SEC. So it's either under a Reg D 506B as in boy or 506C as in Charlie. If it's a 506C, I can only take on accredited investors, right? And I can take on as many as I want. I can solicit it. I can pitch it on this show, right? You know,
Yep.
I can put a billboard out on the highway if I wanted to, right? That's for 506C. And I'd say maybe 1 or 2% of all the offerings are 506C at this point, right? It's it's newer, and there's just not as many people doing them, right? 506B is what the majority of us do, right? And I'd say we've done, 10 deals? 8 of them have been 506Bs, 2 of them have been 506Cs.
Yeah.
And I'll get into that in just here in a minute, right? But 506B means that you have to have a pre-existing relationship with the investor, right? Then they fill out a questionnaire and they self-accreditate if they're accredited or if they're sophisticated. They got to check one of the other boxes, or maybe both, right? If they're an accredited person.
Yeah.
So that's how
And
we're.
what does pre-existing mean?
So pre-existing,
Let's
there's a
talk about
lot
that.
of
A lot of
cloak and
misinformation
dagger
out there about that too, right?
You know, I mean, it was like, we've heard stuff, you have to have 3 touches with the person, you have to have had a phone call and an email follow-up, all this crazy stuff, right? But, I mean, it could be it could be a phone call, it could be an email exchange, it could be, you met them at a conference, right? You need to be able to tie back that you had met this person prior to getting under contract on the offering,
Yes.
right? So, say we have an offering right now, right? And I wanted to raise money through a 506B. First of all, I wouldn't be pitching to
let's
you
say
guys because
in
I
a-
can't do that. But if somebody called us up and said, hey, I want to invest in your latest offering.
You went to a conference and you ran into someone. Can you tell them about that deal?
if you're on a 506B,
Right? He
no.
wasn't existing. You have the deal
No.
opportunity going. That guy, you might have met him at the conference. If you'd have met the guy 2 days prior,
Yes.
pre-existing. Now it's after. So
I would say if you get anything from today's show, realize that a 506B equals pre-existing relationship, right? And also 506B, there's one other hurdle that you can only take on 35 sophisticated investors. You can have as many accredited investors as you want, right? So if you have a big raise and majority of your investors are not accredited, you have to realize that you could maybe run out of those sophisticated spots, and we track this pretty frequently. The majority of our investors, once again, are accredited, but I'd say 20% are still sophisticated, and you have to keep track of that stuff, right? Because once again, I'm selling shares of a company, and I'm not a licensed broker to do that, so then you have to fall within these SEC regulations that kind of are dictated by the 506B and 506C regulations, right? So, sophisticated investors, right? And this one's probably not as straightforward as an accredited one, because at least the accredited one has like some numbers to it, and you can kind of understand a little bit more about what they're trying to get at, right? Sophisticated is essentially anybody that can prove out that they understand investing, they understand real estate if that's what you're selling to them, and that they understand the risks involved in getting into this investment.
And again, the SEC is all about reducing risk for investors,
Yes.
right? Trying to avoid investors losing their money. And so accreditation is one thing, but then you have a lot of people that's like, well, I know 10 times more than the guy that's investing in the apartment. I might work in the apartment industry. I might, whatever. I might have a company that rehabs them, and I understand the ins and outs, or I property manage, any of those things, right? Well, guess what? You probably know actually a lot more than the accredited guy that's investing.
You might.
So arguably, who's the riskier investment now? I would say the guy that's throwing money into it, because he's probably going to lose that money compared to how much you understand. And so that's where the
hopefully
sophisticated,
doesn't lose any money.
hopefully doesn't lose any money, but that's where the sophisticated investor concept comes about, right?
Yeah.
Someone that can, show that they are sophisticated. They might not have the net worth or the, income to qualify as accredited, right? But they do have the knowledge and the gusto.
Yeah. Yeah.
So-
And once again, the SEC, I think, is realizing that they are essentially the accredited, bar is pretty high for a lot of people, and so they're trying to open up some of these alternative investments for people that are not $1 million or more net worth, right? There's not very many people out there that are, and so, but maybe you have 50, 100 grand, 200 grand sitting in your IRA, and you want to invest that. Well, if it's a 506C, you're not going to be able to until maybe they rejigger some of these laws and these regulations, right? So I'm a big proponent of that. I think that there's a lot of changes that need to be happening, and I'm glad that the SEC has taken note of that, and hopefully over the next 12 to 24 months, you'll see some of that roll out, right? So bottom line, sophisticated investor knows what they're getting themselves into, understands investing, understands real estate, and understands the risk of getting into this investment and can ultimately attest to that on the questionnaire that you're going to provide to them, right? So, why is accreditation important to multifamily, right? I think one thing that we want to talk about is, on the 506C versus 506B, right? On the B, once again, you could do the unlimited number of accredited investors versus the 35 non-accredited.
Yep.
So you need to understand that number. So please kind of keep that in the back of your mind when you're raising money.
Yeah, and as we're raising money, we do check it.
No, we
pretty
do.
much daily.
We're
We have a
checking on-
list, and you see how many sophisticated. It's only really a problem for bigger raises.
Yeah.
Right. You might be raising $15 million, and now the 35, sophisticated slots are actually worth a lot more. Right. So maybe you might. I've seen deals where they say, you know what, for sophisticated investors, the minimum is 100,000.
Yeah.
Because you only have 35 slots, right? Versus maybe for an accredited, they'll accept 75 because those are unlimited slots. So something to think in mind.
You definitely. So that's important, right? When you're getting into, can I do this deal? How big is the capital raise going to be? You need to understand you could get jammed up on that, right? The other thing that you need to kind of keep into consideration is that you're filing paperwork in every state that you're taking investors from, right? Called blue sky filing laws, right? And once again, a good SEC attorney will help you do that. That's part of what their fee is going to do. But you're going to have to provide all of this paperwork, right? So you're going to have to provide the Exhibit A, which outlines, who the people are, right? How much they're investing, how many shares they bought. And then ultimately, you're going to have to, do we get jammed up here?
No,
We're good?
keep going.
All right. Well, I don't know what was going on. Shanna. All right. Anyway, what was I talking about? You need to understand that all of that's going to get filed with the SEC, right? And then your lender's going to ask for the same thing, right? Give me a roster of all your investors. Give me the signature pages. And then ultimately, they don't care as much about if people are sophisticated or accredited, but the SEC does. So you need to be able to keep up with this and track all that information, right?
Yep.
So I blew through that pretty quick, man.
Well, it's a pretty easy topic, right?
You know,
Something people asked about, and we figured, hey, we'll dedicate a show to it. But
yeah, no, it is. It's
not.
very important to understand because one of the things that you have to really abide by, and this is why we always suggest if you're going to do what we do, which is raising capital, that you do it with the right attorney. Don't get your brother's, wife's, cousin to draft up a PPM because he thinks he can do it, right? Get somebody that does and lives and breathes this stuff every day, because otherwise you might get jammed up and you could have a lawsuit on your hands, right? And the SEC could slap your hand and maybe even send you to jail. So you need to do it the right way.
Yep.
So
if anyone has any comments, questions, we do this Monday. We do this every Monday, 3:30 Central. Spend the first 15, 20 or 10 minutes talking about the topic. This week we're talking about sophisticated versus accredited investors, and then we spend the last 10 minutes Q&A. So if anyone has any comments, questions, go ahead and leave them. We will answer them live.
I'm gonna go through one. I'll take it a little bit step farther, right? So we talked about a PPM, right? Private placement memorandums. Right now, we're in real estate, so you see a lot of PPMs there when you're trying to raise capital from other investors other than yourself, right? On top of the PPM, you're going to have a subscription agreement, right? The subscription agreement is a document between you and your investor where you're selling shares to them, right? And you're countersigning and everything else. Then you're going to have a company agreement. The company agreement is going to list out what you can do within the LLC. Is there voting rights? Can you can somebody? Can you whatever? It's all going to be listed in the company agreement, right? And then on top of that, if you're doing a 506B, you're going to have the questionnaire, which I alluded to earlier, right? The questionnaire is, what's your net worth? How much experience or knowledge do you have, and this and that. It's usually 20 or 30 questions, a couple pages, not too long, right? And we keep that on file in case we ever get audited or anybody ever wants to know, were you tracking this information, right? And in that case, an accredited person can just check a box and say, I'm accredited. Sophisticated person can just check a box and say they're sophisticated, and as long as we file that and we keep that on hand throughout the investment, we're in compliance with the SEC. Now, if you're doing a 506C, it's a little bit different, right? There's no longer this self-accreditation stuff, right? You have to have a third party verify the accreditation of your investor, which is one of the reasons why most people don't do it, because
it's a lot of work.
It's kind of a pain. That might be the understatement. So you have to send them to, and I think we use Verify Investor is what the company that we've used in the past. So not too bad, but Not as bad on our side, but pretty bad on your investor side. They have to upload a lot of stuff. They have to prove a lot of
and
things
also
out.
we have some investors that are extremely high net worth, and they're like, "What the heck, guys?
I don't want to do that.
I've been in 5-year deals. You need me to go do this extra step now?"
Yeah, so we've paused whenever we thought, well, are we going to do 506C on this, right? And so one of the other things that actually is coming out with the SEC is also, I think Merrill Cowsler had mentioned this, if you had been accredited or self-accredited, through that same group over the last 2 years, then you don't have to do it again, right? So say you're investing 5 or 6 different times with the same group, they've already verified your accreditation at one point, that lasts for 2 or 3 years from what I remember, right? So, but bottom line, that process can be friction, right? Any friction that goes along with the capital raising process can sometimes, people might say, I'm out. I'm going to go to something that's a little bit easier. I just want to check a box versus having to upload my personal financial statement, my bank statements, and everything else, right? That takes time. So you need to understand that. So the 506C, people think it's all sexy because you can talk about it online, right? But I would say that sometimes that friction outweighs the benefits of doing it that way, right? So something to take into consideration.
Totally
but those are the documents that you're going to be dealing with, and that's what's going to be the transaction between you and your investor, right? And then ultimately, after they get the paperwork done, you file that with your attorney. They wire transfer the money. Boom, bam, boom. That's really all the passive investor has to do.
I agree.
Right? So
what
you
else?
got questions?
Anyone have any comments? Questions? Go ahead and leave them. We will answer them.
This was a pretty easy one.
It was a little bit easy.
I can't believe nobody has any questions. Where's Ronnie
Yeah,
at?
because Ronnie said, "What's up, guys?"
What's up, Ronnie?
That's all.
know.
I said, "What's up?" Let's see. So someone asked, between 506C and 506B, what do you recommend for a first-time investor?
506B. Go with the B.
Most people for the first deal, they do friends and family.
Yep.
Right? And guess what? You don't want to go to your Uncle Steve and say, "Hey, I need you to fill out this net worth requirement," and go ask your CPA to. It's a lot of work, right?
Yeah.
You're probably tapping into friends and family, right? And you're probably not everybody in your sphere is accredited.
No, and
so you want to,
when you're starting off,
that's what I mean.
probably the harder thing too. Actually, and you brought up a good point, right?
Bring up plenty of good points, Ben.
You're doing a good job today, man. So, all right. So instead of having the third-party accreditation company do it, Verify Investor, you can also have your CPA or your lawyer attest to your accreditation status as well, right? So they're literally drafting a letter and they're saying, so-and-so, investor is worth whatever and is accredited per the SEC regulations, and then they sign off on it, right? We actually have more people do that than probably the Verify Investor because it's just obviously a lot less painful. But once again, you got to plan for that. So if you're starting off, do the 506B. That opens up those 35 slots, and I think as your first capital raise, you're probably going to need those people to invest with you. So something to keep into consideration. So, what else, man? If nobody has any questions, let's move on, man. Let's go to the toolkit.
Let's keep going.
Oh, new and improved toolkit. What do we got?
DisruptEquity.com/toolkit.
Oh my!
Shanna's made some more updates to it, right? Back of the envelope calculator, right? So kind of helping just really simplify. We do a lot of back of the napkins. I call it the back of the head now. So I've got that memorized because I do pretty much very mentally can kind of get an idea if a deal's going to work out or not, right? And then also a breakdown on just syndicators, right, and their fee structures, like how do syndicators get paid. So, there's a lot in there. Definitely continue to check it out.
Yeah, I mean, we're constantly updating this. Shannon does a great job. Each month, it feels like 2 or 3 times she's updating this thing. So it's going to have our webinars. It's going to have our podcasts as well. So you're going to get a lot of content, and we're not selling anything. So just check it out, DisruptEquity.com/toolkit. You can see what all we got to offer. Love to have you guys download that. So what are we talking about next week, man?
Walking through our multifamily investment criteria. So ultimately, what do we look for in an investment, right? What are the criteria? What are the things that get us excited about a deal and not so excited about a deal? So,
yeah. No, it'll be it won't be necessarily underwriting, which I think we're going to do some more underwriting. That seems to be some stuff that people have been asking us about. So over the coming weeks, we'll be doing some more underwriting stuff too, right? But this is going to be, what is our box, right? Why do we think a deal is sexy versus not? And once again, it's all in the eye of the beholder. Our deal might not be sexy to you, or your deal might not be sexy to us, right? You have to realize that everybody's, investment criteria is going to be different. But we're going to pop the hood, kind of share what that's all about with our viewers here, and let you guys ask some questions.
Yeah.
So
any more comments, questions?
Let's see what we got. Come on, we can talk about anything. It doesn't matter. We talk about real estate, being an entrepreneur.
Going once. Going twice. Hey, guess what? I get some more time back to go knock out emails.
Whoa. We're going to stay on for at least another 5-10 minutes and just sit here and stare at the screen.
Yeah, that's what Ben likes to do with his life. So we'll let him stare at these screens behind us so he can kind of enjoy himself there.
No, but,
Any more
hey,
comments,
we want to
questions?
add value to everybody. So, this is an interactive. If you want to know about a topic, you want us to cover something in the future, dump it in the comments. We'd also love a share or, just a like, in general, but yeah.
Yeah. All right. Well, then going once, going twice. Well, then we will call it a day. Money Mondays. We do this every Monday, 3:30 Central.
Ooh.
And we look forward to seeing you guys next. Guess what day?
Mondays?
Monday.
Oh my gosh.
What time are we going to see them next week?
I think it's 3:30.
3:30 Central.
Yeah.
See you guys.